Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I'll be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first we'll be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly support and demand area. From here, in fact, all these previous rejections to the upside were created every single time that the market tested this zone. It got rejected to the upside quite aggressively. And at the moment, the market is testing this exact same zone, has already started rejecting it to the upside. So in a situation like this, there is definitely the possibility of seeing more bullish price action being created away from this level, as already happened in the past, every single time that the market was testing and rejecting this exact same level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the market has been behaving exactly as you would usually expect in this situation, because we had the creation of a W formation. And as I explained many times, after the creation of a W, what the market most of the times likes to do is first complete the W formation at the neckline and then create the continuation to the upside, which is in fact exactly what the market is currently doing. First, it completed the W formation at the neckline and then it is creating the continuation to the upside. Now, in a situation like this, where the market is still in the process of creating the continuation to the upside, there is good probability of seeing more bullish price action being created for the market to really complete this impulse and create a new higher high, because the previous high was here and the market just started breaking above it. So there is definitely the possibility of seeing more continuation to the upside. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, the situation is quite clear. The market is currently printing a strong impulse to the upside, and there is a good probability of seeing this continuation to the upside being created. And as the market is breaking structure, we have to identify the new structure. And the new structure would be this level here, which is the previous daily resistance from which all these moves to the downside were created, which now that the market has broken it to the upside is turned support. So what we have here identified with this blue box is the previous daily resistance, which is now turned support. And if the market will go and retest this previous resistance turned support, there will be a good probability of seeing more institutional longing, because when you have a confluence of support area like this one here, where you have previous resistance turned support and the Fibonacci levels taken from the low to the high, like for example, the 0.32, 50% and 0.618, you have an increased probability of getting institutional longing, which at that point could further increase the probabilities of getting more bullish continuation. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's check the data precisely for the GBP. Now, what we can see here is that with the last reports, net positions have been increasing. We went from having 44k net positions up to having 62k net positions, so we had a strong increase of the net positioning with 4,200 longs added with the last report and 13.7k shorts getting closed. So institutions have been moving back to the bullish side for the GBP, meaning to the bullish side for GBPUSD, therefore making it stronger. And why do I say GBPUSD? Because all currencies on the spot are traded against the USD. So if we're looking at the data for the GBP, already we're looking at GBPUSD. And we can notice how now institutions are positioned with 106.7k longs compared to only 44.7k shorts, so massively to the bullish side, while down here, just few reports ago, we were completely to the bearish side with minus 28k net positions, so more shorts than longs from an institutional perspective. So there has been a complete switch here from an institutional bearish positioning back to an institutional bullish positioning, which obviously is quite strong for the fundamentals for GBPUSD. So keeping that in mind and moving back to the chart, what do we have? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, as the market is breaking above resistance that is now turned support, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.